continuously announcing further scheme on the water sector because water is the thrust area at this moment. So we are expecting few more announcement going forward after election. So there can be a business opportunity of 1,50,000 to 1,50,000 crore every year. As I told you, we are the water player from last 43 years, and we are qualifying into almost all the tender which is coming by the government at various levels. So our focus will be on a particular type of bulk water distribution business, and we are expecting roughly around in a year. As I told you, we will be very choosy on selecting the order which is boutique in nature, fully funded, high profit margin, easy execution, timely execution. So we are targeting roughly around 2,000 to 4,000 crore of order book every year. And there is enough business opportunity. So we will not find much problem in acquiring that. But these are the target level against the business availability of roughly around 1 lakh crore.
Oh, fair enough, sir. So, sir, the typical order that we say high margin that we are targeting, that would be what kind of margins do we, expect in the orders we want to bid for, as well as what kind of competition will we face? Because if there will be niche, so what will be our USP and what's the competition that we can see, sir?
Look, we are targeting the order from 500 and above, or rather 700 and above crore, where the competition will keep on reducing. So there will be 5-6 players, not more than that, number one. Number two, our target is between 15 to 20% margin we will take the business. But that is there. One in the top level, there will be less competition. There will be a sizable volume of business available, and the limited players are there. So, and we are qualifying to everywhere order. So we will try to take the selected order of our requirement, of our criteria, in the range of 15 to 20%. That is our target level.
Oh, fair enough, sir. And just the last question, sir. Typically...
I'm sorry to interrupt, sir.
Okay.
Could you please call back in the question?
Yeah.
Okay. Yeah. Thank you. A gentle request to all participants that you may please limit your questions to 2 per participant, as there are several participants waiting for their turn. Thank you. The next question is from the line of Smith Doshi from Vice Capital. Please go ahead.
Am I audible?
Yes, sir.
Yes.
Yeah.
Thank you.
So I have 2-3 questions. First is with regards to O&M. So out of that 1,300 crores, is there any portion which comes out from O&M?
Very limited.
And what is the difference of margin profile between O&M and EPC in our business?
In our business, we take the margin in the EPC business itself. So O&M is the requirement which we have to keep, but the main margin is the EPC business.
Yeah, that I understand. But what is the in percentage terms? If let's say, for example, for 100 rupee of EPC project, there is 10 rupee of margin in EPC, and for recurring O&M, might be there would be a 15 rupees or 17 rupees of margin of that additional business. So that type of question I am asking. So can you clarify? Then that would be very helpful.
It will be almost the same level. Like
okay.
Business and O&M may always be the same level of 20 to 25% margin. 15 to 25% margin you can take from the O&M.
Okay. So, in our past history, we have seen that general EBITDA margin of your business is around 8 to 11%, and here we are targeting of 15 to 20%. So, what is the major difference that we are doing from right onwards, from this year onwards?
No, there are 2-3 factors. One, you are seeing the EBITDA margin with the legacy of the project, which, as I told you, completing into this financial year and next financial year, entire thing.
Okay.
Next, new business, what we are taking, we are very choosy and we will try to take only the boutique project. So there our target is 15 to 20%. So whatever the new business we will take, will generate the EBITDA of 15-20%. That is our targeted, it should be, because this is our internal target we have set up for taking the new project.
So, can you, if you are willing to, then can you please elaborate about the competition side for that boutique project? So, how many players are there in that type of profile, or if you name one or two or few, then we can compare and get better idea about all these things.
No, if you see, the L&T is there, Wabag is there, NCC is there, Mega is there. There are few players only. If I take the business of, say, 600 to 600 crore and above, there are very limited players of competitors. So these 4-5 players will be the competitor.
Okay, and with regards to one accounting entry, that for if we pay in 8 years, then the debt would be of 800 crores, and if we pay in 10 years, then that would be of 970 crores. So for that difference of 270 crores, we have done a deferred income provision. So is there any logic behind this? Because that is non-cash item, and that only inflate our net worth. So there is no actual outflow or something. It is just an option that we have opted for. So for that option, we are recognizing the income. So that I am not able to understand why we are doing this. But if you can put some color on that, that would be very helpful.
Good question. Basically, if you see the IDRCL, which is the NARCL attorney, they have done the restructuring and they have given us two options, 700 crore and 967 crore. With our 223 crore paid, 75 crore in hand, 40 crore identified assets, there is a clear visibility, and the Arunachal Supreme Court award, which is towards at the highest level, we have the clear visibility of making the payment of 700 crore in 8 years. And there is no logic. Basically, 8 years and 10 years, there is a difference of 267 crore. Any shortfall, even if that happens, for any sake, we can borrow and we can make the payment. So in all fairness, we will pay to NARCL in 7 years. But this 267 crore deferred income what we have created, we are not putting into the PL account or of the current financial year. We are not taking into the net worth into the current financial year. We are also dividing this into the next 8 years based on the certain percentage, and which is clearly as per the Ind AS requirement, as per Ind AS formula. When there is a certainty and when we have the two options, you can book the deferred income, and that can be spread. I can book the entire deferred income into this year profitability also, but purposely as a conservative accountant, we are deferring this deferred income for the next 8 years. Before that, we will make the payment to the NARCL.
So, as per your answer, what I understand is that Ind AS permitting this type of transaction, because it is completely non-cash transaction. It is like that we are prepaying the loan and not paying any interest. For let's say, for example, if we are paying in 8 years, and if we are paying in 10 years, then there will be a loss of interest in case of NVRCL if they will charge the interest. So that is the difference that we are getting as a benefit, and we are marking that benefit, which is not actually a cash outflow, which is not being paid by us, and we are marking that income, and that inflate our balance sheet might be in net worth side, and that will help in bidding better projects. Might be that is the vision that management is taking. If I'm not wrong, can you please correct me on that side? And second,
this is not the correct situation. Number one, NARCL, whether we take in 967 crore or 700 crore, they are not charging any interest. So irrespective whether I consider 967 or 700 crore, no interest as per the restructuring agreement NARCL is charging from us. Number two, this we are not creating if that was the intention, I could have taken the entire income into this current year and increase my net worth accordingly. But we have not, because it's a conservative accounting and it is as per the Ind AS requirement. Since the 8 years we will spread because of the certainty which will keep on coming on the payment of 700 crore, the formula has been derived as per the requirement of Ind AS to spread this into the 8 years and take the profitability and net worth into that year, not now. So by doing this, technically I am losing, because if I increase this net worth now, my bidding capacity will further increase. But we are going with the law, which is permissible to spread this into the 8 years, and in that years we will incorporate into our net worth.
Okay. That clarifies. And with regards to Vivad Sale...
Sir, could you please call back in the question queue?
Okay, no.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Samarth Singh from PF Capital. Please go ahead.
Good afternoon. Thanks for the opportunity.
Good afternoon, sir.
End of the year, what is our debt on the balance sheet? I think you mentioned 550 crores. Is that right?
The total debt which is in our book, which is reflecting as per the NPV value, is 511 crore.
Okay.
And this 267 crore is reflecting as a deferred income. So this is, in the book, if you see the debt, it is 511 crore.
So we've taken the NPV of the 7 crores and that comes out.
This is again India's requirement.
Right. And is there any other promoter debt as well, or this is the only debt on the balance sheet now?
This is?
Is there any promoter debt also on the balance sheet, or is this the only debt on the balance sheet as of today?
Very, very limited amount with the promoter, because at the time of our earlier lenders' business, they have put some covenant of the promoter debt to be there, because they have told us to infuse certain amount in the subordinate debt. So that amount, that debt is roughly around 35 crore is there in our book. Rest is the NARCL loan.
Okay, so totally 550 crores total debt as of 31st March, and then you have made some payments post that as well, right?
Right.
How much did you say you?
We have paid 223 crore.
220.
No, after that we have paid 189 crore, because 35 crore we have already paid into the last year. And after that, we have paid 189 crore, and 40 crore further will be paid into this current year.
Okay, and this 189 crore came from the cash on the balance sheet or from arbitration award we received post?
If you see, the last year we have received 201 crore from Vivad Se Vishwas. If you see our balance sheet, there is a 206 crore reflecting in cash and bank balance. That comprising of the 201 crore from the Vivad Se Vishwas. So that money has gone for the payment to the lenders.
And in total, for this restructuring, including, the additional equity that was to be issued between NARCL and the promoters, what is the total additional shares that will be issued?
We have given 75 lakh shares to NARCL. That we have to give. We have given basically to the promoters in the restructuring. The total share we have given 1 crore shares, out of which 75 lakh we have given to NARCL, balance to the promoter and promoter group.
So this issuance has already happened, right? As of 31st March.
Issuance has already happened.
Okay, and there were some additional warrants as well, right? About 70 lakh warrants.
That basically the promoter has infused further warrant of 50 crore by way of warrant, out of which 25% they have paid, balance they will pay into 18 months.
And this has happened before the end of the year, right? Or it has happened after?
This has happened along with this allotment to NARCL.
Okay, great. That's from my side. Thank you so much.
Thank you. The next question is from the line of Dhruv Mukesh from Smart Sync Investment. Please go ahead.
We face grave difficulties in receiving money from the government, leading to us struggling for arbitration payment claims. So how is the current scenario in terms of receivable cycle from the government, and how are we seeing the payment cycles?
Good question. That's our targeted of that unless there is a fully funded project, we are not going to take the business. And in any case, the liquidity in the various government has improved substantially. And now forward, when it is a fully funded project, and when it is funded by the World Bank, etc., then the control mechanism and the fund availability will never become the issue. So then it's like a term loan. When you send the bill, the bank disburse the same. The same way, once the funded project will be there, we raise the RA bill, we will get the payment immediately. So that's our targeted, and we will only select those projects. And if it is a fully funded project, if it is then there will not be any problem into the payment. In any case, the payment system has improved a lot, because every PHED, etc., there is a thrust of the government for improvement of the water sector. So they have released the fund. All the state, all the central has released the fund to their PhD, etc. So payment in any case has improved, but our target to take care of this, we have decided internally. Without the fully funded project, we will not take the project.
Got it. So that is very helpful. And I just wanted to ask for some clarity that we have currently issued around 1 crore shares for this restructuring exercise and 70 lakh warrants to our promoters, right? And sir, we don't plan any further equity dilution as such, right, going forward, because majority of our claims will be made through our arbitration.
Because we have tied up 150 to 170 crore. So at the moment, we don't require.
Okay, sir. That's it from my side. Thank you so much.
Thank you. The next question is from the line of Rishi Kothari from Pi Square Investment. Please go ahead.
Yeah, thank you so much for the opportunity again. In terms of the business which we are into right now, the client segment that we are currently focusing on the government projects, right, if I'm not wrong?
This water is mainly government. No private are coming into the water. So all the water projects are the government projects. And in the water, if you see, there are three segments. One is the bulk water, which is constituted from river to the reservoir. Second is reservoir to every tap. Third is from the tap to the sewerage and again to the river. Our target area will be the bulk, which is the river to the reservoir.
Okay. Got it. Thank you.
Thank you. The next question is from the line of Smith Doshi from Wise Capital. Please go ahead.
Yeah, thank you for the opportunity once again. And so I just want to ask with regards to that, we are seeing that 1 to 1.5 lakh crore is the expenditure which government is doing yearly basis, but we are focusing on the boutique projects, large projects. So what is the targetable market for us out of that budget?
If you see, I can't tell you exactly, but if you see, around 50% is on that category and 50% is the below category. So if it is a 1 lakh crore business, 1 or 1,50,000 crore business, roughly around 50 to 75,000 crore business will be the business which we will target.
Okay.
In any case, even if it is a small and if it is a profitable and fully funded and it's a timely execution, we are not averse to take that project. We'll take that project also. But our target, because the competition level on the higher amount of project will be very limited. So that is our target area. But even if it is a very technical project where there are very limited players to execute, because we have our expertise and technical team of last 45 years. So if those type of projects are coming, and even if it is a lower value, and if it is giving the good margin, and if it is a fully funded project and meeting our criteria to be executed in 2 to 3 years, we will be happy to take that project.
Okay. And you have named few of your competitors, and they are boasting for their patent and technologies and like that things. So, for example, Wabec has 125 plus patents, and their cost-saving methods are good. So, what type of the USP which we are enjoying that makes us a formidable player in the market? So, that is the qualitative aspect that I want to understand from your side going ahead.
Good question. If you see, in the 40 or years plus, there are only two companies, we and L&T, and more so only focus into water are we. We have developed our expertise, our our knowledge, our technology all into the water from the beginning. And that is our USP. So we on the water, we are having a very good expertise, technical knowledge and human resources, which are the necessary and requirement for execution of any project. Number two, we from the beginning, we are very, very focused on the technology. If you see, we are one of the earlier company who of our size who has used SAP, or not only SAP HANA, which is the highest version of the accounting and control software. We have Darwin Box, we have Wrench, we have all the technology which is not only reducing our manpower, reducing our improving our efficiency, but it also having the better control on the document, on the paper, on the process, and on the flow of the business, and on the flow of the project execution. So that is our second strength. Our third strength is our fund monitoring. Like if you see, I'm sure very limited company in the EPC fund, they do all the project into escrow mechanism. Like at the moment, we have whatever 12-13 projects which is active are running, all are maintaining through the escrow mechanism. Means one project, it is controlled, all the funding incoming into that project, all the expenditure is going into that project, and the contractor, supplier of that project, we maintain the escrow arrangement in such a way that they don't require any LC, they don't require any BG. They keep on supplying, they are taking the call onto the customer, and then there will not be any working capital requirement into that. That is our third USP. Fourth USP, because of our credential, because of our 50 years of playing role, our qualification is almost in every project, every area, every size of project, every size of O&M. Like if the government pay 1 lakh, very, very limited company, even to if you go, barring L&T, even if you go to other companies, there may not be that they will be qualified for 1 lakh crore or 1,50,000 crore in almost all. We are doing, because we have the 43 years of track record, we have the execution track record, we have set up the plan. Like in the river, if you see the Gujarat river linking, that Sony 1, 2, Sony 1, 2, 3, in all we are from the beginning, which are very limited players are there. So that PQ is our additional qualification which we are having, which giving us the edge to various other competitors in the type of project which we can bid. So that gives us the advantage for choosing the boutique business which we will require to take for growth and for our future profitability. Fifth, since we don't have to pay any interest, we don't have to pay any liability to the lenders for the repayment, we can afford to take the limited project, selected project, and we can afford to do the business with our terms and our credential and our profitability. Otherwise, there will be a pressure for the payment of interest, payment for the repayment, and then the people used to take the project. And then some diversion of here and there, which in our case it is not possible because we don't have any compulsion of that.
Okay, got it. Thank you for the elaborated explanation. And I have one last question with regards to accounting entry.
Sir, Mr. Smith, could you please fall back in the question queue?
Okay, no problem.
Okay, thank you. The next question is from the line of Tej Patel from Niveshaay. Please go ahead.
Hello, am I audible, sir?
Yes.
You are audible.
Yeah, thank you so much for the opportunity. So, sir, since you shared, we have been not recognizing interest on our loan since November 2019, and we haven't paid also an interest to our bank borrowings. Then, what are those 50 crores cash outflows for the interest paid? Are those on the promoter or related party loans?
So, if you see, even if you don't pay, if you are continuing with the bank, you have to pay the cutback. That is the compulsion. If in the restructuring, if you do the last 2-3 years, we are not paying, but we have to pay a certain amount to the lenders as a cutback.
Okay.
So that amount goes to the goes to the repayment to the lenders.
So you mean you probably have to pay 50 crores every year till you repay those loans, right?
Not now. It was earlier.
Okay. And
now there is very clear. Now there is only sole banker. It is NARCL. NARCL has signed, executed the MRA where they have clearly said that you have to pay 700 and 967, nothing else. And they have clearly told that it is linked with the arbitration. So I don't have to pay any interest, I don't have to pay any amount from the cash flow, barring 1 or 2 crore every year, that is hardly matter.
Got it. And sir, correct me if I'm wrong, you said from next year, we on the PNL, we would see zero interest, right? On the existing loans, on bank borrowings as well as the related party, right?
Mm-hmm. So there will be some, not the interest, but there is a bank charges, etc. for the LC charges which we have to pay. And then second, there will be some impact because it's as per the India's requirement. When you do the NPV calculation of this 700 crore loan converted into 511 crore into the current financial year, this will keep on adding up to the 700 crore in next 8 years. So there will be some amount of interest some amount of India's adjustment which we have to take the charge into every year accounts as per the India's calculations.
Okay. Now, sir, I get it. You said you have the ability to, take in more orders. Probably you said 2,000 odd crores orders. You probably would have an inflow in next 2 years. But sir, given that you already have an existing 1,300 odd crores of order book, and probably let's say you plan to take more orders, but then do we have enough? Like, how would we be able to manage, executing those projects? So we would also have to take more loans, right? More short-term loans. So, how would you be able to manage those cash flows, bearing you have to, pay NARCL approximately 8 to 9 crores every year? So, I wanted more idea on how would you manage your cash flows vis-a-vis the project execution which you will undertake?
No, there are two things. One, we don't have to pay even 9 crore. We don't have to pay anything from the cash flow. Maybe 1 crore every year we have to pay from the cash flow to the NARCL. Number two, this is where we have the visibility of the liquidity of roughly around 150 to 170 crore by Vivad Se Vishwas money, by infusion at the time of resolution with NARCL, which we have brought as per the restructuring plan, the promoter additional infusion of 50 crore of warrant, and the sale of some assets. So we will have the visibility of 150 to 170 crore, that visibility on the cash we have. Third, we will do the business only on the escrow mechanism. When we do the escrow mechanism, we do the tie-up with the suppliers and the contractor, big contractor, that the money will come from the customer and will be distributed automatically by the lenders to those suppliers and contractors. In that case, we don't require the working capital requirement.
Okay, got it.
These trends will bring us together. We can take the business even 4,000, 5,000 crore. But our internal target to take only boutique business, where we have the margin of 20%, 15 to 20%, and funded project, easily executable, reasonable time executable, and fully detailed project report is completed. We will not go to the horse race of taking every project because we don't have that much requirement to have the cash flow or to the payment to the interest, to the payment of the lenders, etc. We don't have that requirement.
Got it, sir. So, sir, you said this 1,300 crores would be, completed in the next 2 years. But can you put how much in terms of percentage would be completed in, let's say, in FY25, and then the rest would be in FY26?
this we will tell you, but it is, you can take 50-50. That